For the past 7 months, I've been running my Income Four Ways strategy with SCHD, leveraging covered calls, cash secured puts, dividends, and capital gains to generate steady cash flow and grow my position. But this month, I'm shifting my focus to a Dividend Aristocrat, Rowe Price, TROW, a company with a long history of increasing dividends. I'm not just reinvesting dividends, I'm using multiple income streams from this position to increase the number of shares I own while lowering my cost basis. I'm Patricia Saylor, managing partner of Saylor Financial Fundamentals, making investing and options trading clear and actionable. In this video, I'll walk you through my first trade setup with TROW. I'm buying 150 shares and immediately selling an out-of-the-money covered call and an out-of-the-money cash secured put. This setup generates instant income, reduces my costs by about $2 per share, and keeps me positioned for long-term growth. T. Rowe Price isn't just another stock, it's a dividend aristocrat, meaning it has increased its annual dividend for at least 25 consecutive years. That consistency makes it a great candidate for this strategy, but dividends alone aren't enough. I'm taking it a step further by selling options to accelerate my income and reinvestment. I'll show you exactly how I structure the trade, track it on my spreadsheet, and use the income, not just drip, to reinvest and grow my position. This approach maximizes both growth and income opportunities from a single stock position. If you're new here, I break down options trading in a way that makes sense, so be sure to subscribe for more insights. Now, let me show you this trade. If you have been following my dividend portfolio, you may recall that I traded cash secured puts and covered calls on SCHD beginning on July 23, 2024. This month, in January of 2025, I decided to stop selling cash secured puts and covered calls on SCHD and just hold my shares long term for dividend gain and capital appreciation. And I've decided to move on to a new dividend position for this video series. I would like to trade a dividend aristocrat, and I considered two different possibilities. One of them is T. Rowe Price. It trades at about, right now, $118 a share, has a dividend yield of 4.21%. I also considered a Dividend Aristocrat ETF. NOBL has a share price of about $103 right now. It's in a slight pullback. The yield is only 2.28%. Because it follows the dividend aristocrats, I would expect that yield to increase and for the share price to continue to increase. So this would be a nice fund to have in my account. But when I looked at the options chain, there are not very many options expiration dates available, and it does not seem to be very heavily traded. So I'm going to go back to T. Rowe Price, and I think this will be a better choice to work with. It has expirations every month. It's a little more heavily traded, and I think it's just going to be easier to work with. And I like that 4.21% dividend yield right now. The last ex-dividend date was in December, so the next one will probably be mid-March. I'm going to go ahead and buy 150 shares. Okay, that filled at $117.86 per share. And now I'm going to sell a covered call. So let's pick a strike price that I think is not that likely to go in the money or be called away from me. So a $125 strike has a less than 20% chance of going in the money and would bring me between probably $80 and $90. If I go up to a $130 strike, I can only bring in probably $20 or $25, so that one just doesn't seem worth it. So I'm going to sell a covered call with a strike price of $125 expiring in February. That filled at 86. And now I'm going to sell a cash secured put also expiring in February. I'm trying to decide between the $115 strike and the $110 strike. The 115 strike has about a 38% chance of going in the money and would bring me $200. The $110 strike has about a 20% chance of going in the money and would only bring me $85. Since I like the dividend payout and I wouldn't mind having 250 shares instead of 150 shares, I'm going to go ahead and select the $115 strike, and I will probably roll it when I get to February 21st, but I might also consider taking assignment to buy the shares if it goes in the money. Okay, that one filled at 202. Let's put it all on the spreadsheet and see where we stand, and then we'll adjust and make rolls on February 21st. Now I'm going to sum everything that I've spent and everything that I've brought in. I bought 150 shares, sold a covered call, and sold a cash secured put. So my out of pocket right now is $17,383.32, and I have 150 shares. So my average investment per share is $115.88, and we'll come back and make adjustments on February 21st to keep generating income.